Good morning. Welcome to LiftFund's virtual series for 2021. Please note that if you have questions during the event, you can place them in the chat feature. We'd like to again thank Wells Fargo for its generous underwriting of the 2021 LiftFund virtual series. And to get us started, please welcome Bill Mall, a member of LiftFund's board of directors.
Well, good morning. Thanks, Dan Yaxall. It's my privilege to welcome all of you. And as we understand, there were something on the order of more than 250 of you who have registered to join us today. You're going to meet our guests here in just a moment. And our webinar is titled, as you know, because you signed up, Is It in the Numbers? Where small businesses are and where they may be headed. The guests you'll meet here in a moment are folks we know you know. Blake Hastings of the Dallas Federal Reserve in the San Antonio region, and AJ Rodriguez of Texas 2036. They'll be joined by our moderator this morning, LiftFund CEO and President Janie Barrera. And they're going to share their thoughts about what small businesses have been through, where they may be headed in the future as we come out of COVID. Because the mission at LiftFund is to provide small business entrepreneurs with access to capital and technical assistance for their businesses, we thought we'd share the voice of one of our clients and what this last year has meant to her business. Please join us now with a short video from Gabriela Smith of Big State Construction.
My name is Gabriela Smith, owner of Big State Construction, and I have been in business for the past 4 years. 2020 was a year of many dreams, many wishes, many goals that we were looking forward to accomplish as we wrapped up 2019 quarter. So 2020 already had scheduled commercial project that was wrapping up, so that was keeping us busy. Once COVID put a stop to the business, early quarter of 2020, we had to make a decision to stop our business. So we stopped projects until we try to figure out what was our next strategy, what was going to be our next move. And what we did to pivot to help ourselves and our employees was we only did anything related to exterior work that made it a point that we were not coming into clients' homes or businesses. Then we had to think about, what are we going to do if we're not getting contracts? So opportunities like Ascend Houston, it's a program that caters to small business owners, especially in the construction field. And that was a program that was already in place. So we just decided to continue doing that. Other programs that we decided that we were going to engage was Turner Construction. It was an 8-week program with them. And we were also part of the Business Institute under the Houston Hispanic Chamber of Commerce. So when you ask pivot, or when we say pivot, for me, it was like, okay, if we can't work physically and be out on the field, then I need to continue working on our educational side to understand what's going to come ahead of us. And I'm grateful for the opportunity that LiftFund provided, because that was something sponsored from LiftFund. We're busy, we are working hard, we're not giving up. We're not stopping our train here, we're not stopping our thought. Organizations like LiftFund, organizations like Chamber of Commerce, City of Houston have been key for us to continue working.
Thank you, Gabriela. Well, we move on now to introduce someone who really needs no introduction, and that's Janie Barrera, who will be our moderator. It was 27 years ago, during the first year of operations at LiftFund, 1994. Janie stepped in to lead what was then known as Acción. That year, the team supported about 80 small business owners with seed capital averaging a loan size of about $1,400. Today, we make loans for small businesses of up to $500,000 and startup loans up to $50,000. To date, LiftFund has provided almost $400 million in capital to some 23,000 small businesses, created as many as 20,000 jobs, and provided almost 14,000 hours of business education and consultation. Our LiftFund team further has developed an online risk assessment model. We call it the microloan management system, as an underwriting tool to help qualify clients for loans. That system has now been adopted by numerous other CDFIs across the nation. A few years ago, the Accion brand evolved into what we now know as LiftFund to better reflect our clients and the extensive financial and business support services that we offer. As LiftFund, our mission has been to lift small businesses by providing capital and education, and we do that now in 14 states across the Southeast. Janie Barrera has been at the helm of LiftFund for all 27 of our years in business. She and her team are recognized as one of the leading CDFIs in the nation. It's now my pleasure to introduce your moderator for today's discussion, LiftFund CEO and President, Janie Barrera.
Thank you, Bill. I appreciate the leadership you and the other board members provide to LiftFund every day. And I thank you, Gabriela, of Big State Construction. Your example is an inspiration. At LiftFund, we believe that entrepreneurship is a way to create jobs and assets that can transform families and communities. We work with business owners who have historically and financially been marginalized and held back from pursuing their dreams. These include women, business owners of color, and veterans. The past year has been an extraordinary one for small businesses, our nation, and the work that we do here at LiftFund. We have endured a global pandemic, an economic shutdown that impacted small businesses. We are still experiencing economic and social justice issues, record unemployment, and even a historic storm that froze Texas for a week. Here at LiftFund, we have learned to pivot, like Gabriela just said. Like many of the small businesses, we too had to pivot to continue to move forward. In a typical year prior to COVID, LiftFund would lend about $35 million in loans to about 1,000 clients. In 2020, we more than doubled that amount. We dispersed $38 million in loans and $45 million in grants to more than 4,400 small business owners. Just as important, we provided thousands of hours of consultations and technical assistance to more than 4,600 small business owners, and we did that online. I would like to make 3 points about LiftFund and our work today. First, we continue to provide loans to small businesses and COVID relief support as they continue to regain traction, and we are finishing up another round of PPP lending. Second, with the philanthropic help and support that we have received from generous donors, we are running programs to support small businesses. In San Antonio, we've developed a program called HELM. It's an incubator, an accelerator program that's focused on small businesses with a wraparound approach. So this new program offers business skills, access to professional services, and access to capital to support their recovery through this year and set a foundation for success. And you heard from Gabriela in Houston, we are running a program called Ascend that concentrates on construction and rebuilding. And in Dallas, we participate in a program called Revive. In other cities like Corpus Christi, we are able to offer loans with low interest rates because of the city's incentive to help small businesses. And third, we are launching several new products and services, such as Level 5, a product we have developed for banks and other partners to help match customers that they may not be able to help with LiftFund. As you can see, the work is ongoing and full of opportunity. Well, now let's get to our main speakers for today. I'd like to introduce you to our 2 guests that I believe offer opportunity, collaboration, and support for small businesses. Blake Hastings is Senior Vice President with the Federal Reserve Bank of Dallas and oversees the San Antonio branch. Blake is responsible for all Dallas Fed activities within the Central and South Texas. AJ Rodriguez is not only my neighbor, but is Executive Vice President for Texas 2036, a not-profit organization focused on enabling Texans to make policy decisions through accessible data, long-term planning, and statewide engagement. Thank you, Blake and AJ, for joining me in this conversation today about the state of small businesses and sharing your insight and outlook. So Blake, I would like to start with you, please. You know, you are a champion of small businesses, and I've heard you in the past that you've talked about how the small businesses are the driver of much of our economy. It's been over a year that the shutdown has been in place. Obviously, small businesses in particular have been hard hit during this pandemic. What is the Federal Reserve seeing in the numbers in terms of initial impact? And more importantly, how small businesses positioned today as the national and regional economies continue to reopen? What do you all see in the numbers?
Sure. So first of all, Janie, thank you for the kind invitation to join you today, and my good friend AJ for this panel. I'm a big fan of you and your team's work. For those of you watching, you should know that we're such big fans of Janie. We asked Janie to serve on our San Antonio branch board of directors for 6 years because she brought the voice of small business to our discussions. And so with that, Janie, when we first moved into the pandemic, we at the Dallas Fed, and for that matter, really across the entire Federal Reserve System, we recognized that small business was going to be a critical element of the experience going through the COVID not only pandemic, but the economic recession that we knew was going to ensue. Not only because they represent about 99% of all businesses in the United States, 99% plus, and over half of all employment comes from small business, but more importantly, about 2/3 of all job growth in the United States is driven by small business. And so we also know, unfortunately, that most small businesses don't have the depth of capital to survive more than a few months of zero revenues. And as we went into shutdowns, we began looking very close and very quickly at this issue of the survivability of small businesses. And I will tell you, early on, we were extremely worried about not only the survivability of the small businesses, but more importantly, what that would do to jobs in America. And ultimately, when we were ready to recover, would there be businesses to recover those jobs with? So think of it as, critical infrastructure to the jobs economy, that being small business. And what we saw early on was most small businesses felt like they could hold on maybe 2 to 3 months. Most bankers were telling us the same thing about their small business clients. And so we had a big fear that there was going to be a huge loss of our small businesses across the entire country. Fortunately, we began turning our attention to what we could do at the Fed. We obviously worked very carefully with lawmakers in Washington to make sure they had an acute focus on the need for helping small businesses get through the pandemic. I think we can all say, despite some of the administrative ineffectiveness of it or inefficiencies of it, the PPP program that Congress passed, that the Small Business Administration ran, it played a huge role in helping small businesses sort of weather the storm and allow them to have time to as the operative word of the day, pivot their businesses to what made sense and allow them to keep their employees employed. And so we reacted as well. We created a PPP lending facility that allowed banks, organizations like yours, to take their PPP loans, bring them to us as collateral so you could borrow from us and go out and make more PPP loans than you would be able to do with your own capital structure by itself. So all of that together worked for a large part, but we still lost about 22% of all small businesses, a pretty big number. In fact, as you look at it from a diversity perspective, 22% of all businesses, but 41% of all Black-owned businesses, and about a third, 32% of Hispanic-owned businesses, small businesses went under, particularly in the time period from February to April of last year. And we've talked to all of our good friend Ramiro Cavazos at the U.S. Hispanic Chamber, and his numbers are pretty much the same. Of their membership, they lost about a third who went out of business. So those Latino businesses went under. The good news is, if there is a good news to that, two parts. One, we're starting to see some of those entrepreneurs come back and restart new businesses. Now, that's good news because that gives us optimism that there'll be some new job creation that comes. Unfortunately, as you know, Janie, all too well, it's easier to create jobs and get back if a business stays in business than if it has to start over from scratch. So there will be a little bit of a lag, if you will, in our recovery because of these small businesses having to restart in many cases, but they are restarting. The other good news is we thought the damage would be a lot worse. We thought the carnage could be as much as 50 to 60% of small businesses could go under. And as we've looked back on it, and the most recent data we have from last month, there was about a 25 to 30% increase in the turnover and the exit, if you will, of small businesses. So in a normal year, you're going to lose about 300,000 to 400,000 small businesses at just sort of normal churn as businesses come and go. So we lost an additional 200,000 above and beyond what we thought, what we typically would see in a given year. So those are big numbers, but they could have been in the millions if it weren't for things like PPP and it weren't for agencies like and CDFIs like yours, Janie, that stepped in and provided that lending at a time of great need. So that's kind of where we've been, the damage that's been done, but there's a nice shape to the recovery. And most small businesses that are around today feel their revenues are going to increase this year, particularly by the end of the year, and that they're going to start continuing to add to their workforce throughout the rest of this year. So as the Fed's concerned, we worry about stable prices and maximum employment. From an employment perspective, we think things could have gotten a lot worse. And things certainly look optimistic for this year as driven because of the drive that small businesses will have on the economy overall.
Mm-hmm. Blake, you're absolutely right that the Federal Reserve coming into play with the PPP was one of, well, first of all, it was unprecedented, right? I mean, in terms of the Federal Reserve taking this kind of action. But it really was a lifesaver for CDFIs across the country because we didn't have to go out and look for, the capital at a higher cost. We were able to take advantage of going directly to the Federal Reserve at an interest rate that was very reasonable. So we could then continue to do the PPP lending. So I want to congratulate the Federal Reserve of opening it up and doing something new and innovative that had never tried before. So on the type, you're saying that businesses are coming back. Obviously, they are resilient in that way. I've talked to small businesses that last year that said, Janie, I'm an entrepreneur. I will be in business. I don't know what kind of business I'm going to be in, but I will be in business in 2021. But what I've also heard from small businesses is workforce and workforce development. And it's hard for people to find good workers to come back and be part of their small business. Do you see anything out there in terms of a trend or what's happening? How can this thing be fixed?
Yeah. I think at the end of the day, over time, it will fix itself. However, in the short run, it's going to be there are some impediments to getting people back to work. And we're seeing this at the Dallas Fed. As you know, Janie, we've been doing roundtables with small businesses for years. In fact, you used to help us host some of those. And we've been doing roundtables not only with small businesses, but specific industries like restaurants, the leisure and hospitality, hotel, motel industry. And what we're hearing consistently across the board is they're all having a difficult time finding workers. And it's a kind of a multi-pronged issue. And so the solution is going to have to be multi-pronged. The first is they're competing with the unemployment insurance that many of their workers are still getting and that Congress has extended. And so what many of these restaurants and small businesses are having to do is raise their wages to essentially compete with the unemployment insurance alternative. How much do I have to pay a worker to come back to work if they're versus staying at home and collecting unemployment insurance for another few months? Now, eventually, those unemployment insurance extensions will run out, and people will be incented to obviously come back to work because they won't, and businesses won't have to compete, so to speak, with the unemployment insurance. So that's one issue. Another issue that we're hearing consistently from business contacts is they had to lay off workers, they had to downsize, and as they try to get those workers to come back, not only have those workers found other jobs, but they found other jobs in some cases in other industries that they want to stay in. So, for example, there are a lot more people working in fulfillment centers and warehouses for Amazon and people like that, and delivery truck drivers and other things that are going to be hard pressed to come back to the restaurant business, for example. And so I think what that's going to mean is we're going to have to take a look at how to reskill and retrain people, perhaps in sectors who've lost jobs that aren't coming back as readily. And then lastly, we're going to have to look at some of these other natural impediments. And I'll talk about this a little bit more later in some of the later questions, but we're going to have to do things that are natural inhibitants, for example, like childcare. We have found at the Dallas Fed that childcare is fast becoming one of the greatest impediments to getting workers back to work than it's ever been. And why is that? Because a lot of childcare is small business, and a lot of childcare businesses went out of business or are struggling to get back open. Well, this recession has one unique facet about it, different than the previous recessions. Previous recessions, men lost jobs at a greater rate than women in almost every recession going back to when we started recording data. This recession has been the opposite. More women have been impacted than men. And it's primarily because their jobs are concentrated in the service sectors. But as they look to come back, things like childcare are going to be critical to being able to get them back. Schools are reopening, so that's a good thing that will help. But again, for preschool, elderly care as well, for those services, we as communities are really going to have to make sure those businesses open, because they are a critical part of the infrastructure of the economy to getting people back to work, particularly our female workers. So those are some of the sort of the challenges we have right now, Janie. It's the unemployment insurance. It's competition for new jobs that didn't exist a year ago, and it's things like childcare that we're going to have to grapple with to get workers back to work.
Blake, have you all had any conversation with banks in tech or in your region about access to capital and going forward? You know, usually when you do underwriting for a small business, you look at financials from the previous year. Well, goodness, if you were shut down, how, you can't necessarily use that. And so, in this whole ecosystem of access to credit, are you all having any kind of conversations about opening up the spigot, if you will, or offering different ways of providing more access to credit?
Yeah, so just to put a fine point on it, you're absolutely right. Access to capital for small businesses has always been a critical issue, and it's perhaps even more profound going forward. Prior to COVID, 1 in 5 healthy small businesses only had enough cash reserves to make it 2 months if they lost revenues, or if their revenues went to zero for 2 months. That's prior to COVID. And so that just gives you an idea of why we were so laser focused on small business in general. The good news is, yes, we were able to keep credit flowing to small businesses during the crisis. But as we come out of it, to your point, as a banking regulating entity, the Federal Reserve is one of many entities that supervises and regulates the financial industry. We're definitely looking at how banks are managing their portfolios, how they're managing their lending activities. And there's absolutely a lot of forgiveness, if you will, being granted for this anomalous year, that we experienced with COVID-19. So whether that be the income statements of their customers and how good or bad they might have been during COVID, or balance sheets more generally, there's been a lot of sort of forgiveness. Similarly, just like we allow banks to sort of go through a period of time where they allow their customers to not pay their loans for a period of time while we were going through COVID. As regulators, we didn't clamp down on banks for doing that. We gave them the grace, if you will, to be able to do that. And I think we're going to continue to do that because we recognize that the recovery is not going to be instantaneous. It's probably going to take a couple of years to repair all the structural damage that's been done here. And absolutely, we're going to work with banks to make sure they have the sufficient latitude and runway to do what they need to do to help small businesses, while at the same time continue to be, safe and sound in there and being prudent with their lending their lending practices. So yeah, definitely a balancing act that we've always played, but definitely one where there's a lot more understanding built into it, given the recent circumstances.
There was a recent study done in San Antonio looking at the ecosystem of just here in San Antonio area. And one of the recommendations that came up was to create a fund for a loan loss reserve. Because in this time of, in what we're living in right now, to be able to take risk, a loan loss reserve is something that could be available then, like for CDFIs, for example, to work with. Are you all going to be looking at banks in terms of increasing their own loan loss reserves in this time?
Yeah, so one of the tricky things about loan loss reserves and regulators is that if we're not careful, we can sometimes be what they call pro-cyclical, meaning we take actions that make the bad times worse than they would otherwise be, and we take actions that would make the good times better. So in previous years, we would say during good times, your loan loss reserves can be smaller, right? Because the economy's going and keep lending. There doesn't seem to be a lot of economic risk out there. And then when times turn bad, we come in and say, okay, you need to increase your loan loss reserves, which means less lending at exactly the time the economy probably needs more lending, right? More support coming into it. So over the last number of years, even prior to COVID, we began adjusting those sort of pro-cyclical behaviors of ourselves as regulators, and certainly recognizing that the time to build your loan loss reserves is in the good times, and the times to maybe let your loan loss reserves deplete a little bit is in the tough times when you don't want to turn the spigot off of credit to particularly small businesses, because that will ensure an economic downturn, that will ensure a recession and job layoffs and all of those things. So yeah, absolutely. We're looking at that pro-cyclical behavior and making sure that we reverse that and take that. Now, I can't tell you exactly what our regulators are going to do with loan loss reserves because that's done by individual banks and all that. But as a general trend, that's sort of the direction we had been going even prior to COVID, and we'll continue to.
Great. Well, don't go away, Blake. I'm going to switch over to AJ now for a couple of questions, and then you'll be back. Okay, so hang in there. So AJ, let's start with our, working at Texas 36. It's pretty much a new organization, or you were new to the organization, and you're looking ahead toward the bicentennial of Texas, and you're doing that through policies, civic engagement, and the Texas legislature. So what was your organization's perspective on the past year as you prepared for this legislative session that's going on now?
Yeah, well, thanks, Janie. And as Blake mentioned too, just a pleasure to be here on our virtual front porches, right? We're neighbors, as you mentioned, and Janie, Blake, and Bill and I go back to chamber days. So very happy to see my friends again. And Janie, thank you also for LiftFund's and the Federal Reserve Bank, rather, incredible contribution to the community that you had in terms of empowering small businesses and entrepreneurship. Special amount of thanks goes out to you in regarding to all that processing and carrying through on all the PPP program. That was an incredible burden, but so glad that your organization exists to help those businesses out there.
Thank you.
And as you said, Texas 2036, we're a nonprofit, nonpartisan public policy shop. And we're working to ensure that Texas remains the best place to live and work by our bicentennial. And we're preparing our agenda, Janie, essentially for this year's unprecedented session, legislative session. COVID obviously dominated our focus. And the word that kept coming up, as you mentioned earlier, with all the small businesses out there, was resiliency. And so addressing those challenges that we had in a way to ensure that the next time that we encounter a pandemic or energy crisis or whatever the future may bring that is completely unimaginable to us today, we want to position Texas so that we are able to not only weather, pun intended there, these evidence, but also bounce back faster and stronger. And our founder, Tom Luce, quotes Winston Churchill often saying, "Never let a crisis go to waste." And the appetite for the impacts that were caused, right, by the 250,000 less kids enrolled in school this year, the learning loss that's associated with this abrupt switch to online learning, the sudden strain that was placed on our healthcare providers, the uncertainty about capacity of those providers, the the state and county governments, they're lacking the technological integration essentially to communicate about the sudden impact of those infection rates that were happening. And we are also looking at, coming into this session, a significant budget deficit from our state comptroller. So we looked at we have a 36 aspirational goal framework that covers 6 different pillars, from education, healthcare, natural resources, infrastructure, justice and safety, and government performance. But we also realize that when everything is a priority, nothing is. So we really wanted to focus our legislative priorities on those items that were most pressing, right? Especially during this first of 7 legislative sessions that we have between now and our bicentennial in regard to our organization and what we're trying to accomplish. So these are issues that are long-term in nature, Janie. We won't change them overnight. Expanding broadband connectivity, which I'll talk about in a little bit also, is probably the best example of this. We call it the farm to market road of the 21st century. We're connecting students with their teachers, patients via telemedicine with their doctors, and of course, small businesses with their customers. So that really has been kind of our focus, is taking those items that are most and prioritizing them for this particular time frame and this particular session.
So, like you said, there are a lot of issues, but you do have to prioritize. So what have you all decided to do as maybe your top 3 issues that you'll be addressing? And do any of those benefit or affect small businesses?
Well, absolutely. And we have 30 days left in the legislative session, so we've been actively engaged on every single one of these, Janie. So I would say that the top 3 for us are education and workforce, healthcare, and broadband. And we've made some strides in each of those, right? So in education, including the preservation of ensuring that the improvements in the funding that was placed last session for public education through HB3 remained, and we wanted to make that a main priority for us. In addition to how we can recover from that COVID learning loss that I mentioned, through this infusion of federal stimulus funding that we're getting for state and local communities that we'll be receiving soon. Unfortunately, even before the pandemic, Texas students were falling significantly behind their counterparts in other states. So the COVID has only made that worse. In early assessments, we found this year, in looking at TA data, I know Blake's organization is all about data, and so are we. It starts and ends with data for us. We found that only 15% of Texas 4th graders were achieving, quote, meets grade level from that standpoint. In
What was
math,
that percentage?
15% of Texas 4th graders achieving meets grade level in math. And our state's going to be missing an incredible opportunity. We don't step in to help these students achieve their full potential. And our economy is going to rely on these students going forward. So HB3 is making an infusion of funds and supporting these students that we won't realize the benefit for another 10 years, right? So there's some immediate things that we had to do. And that's why we also looked at workforce and ensuring that we're encouraging additional collaboration amongst those big agencies that are working with the private sector on that pipeline of workforce. I know you mentioned that's an issue for small businesses in terms of obtaining those workers.
Right.
So the Texas Workforce Commission, Texas Higher Education Coordinating Board, Texas Education Agency, we're going to make sure they're developing enhanced, efficient, strategy and programs that create meaningful structural change and eventually lead to more Texans earning living wages. That's one of the focuses that we had. You probably saw there was recently a great piece in CNN that Jeb Bush had that essentially said that America doesn't have a jobs problem; it has a pathways to jobs problem, and that's part of what we're focusing on as well. And we rank, for instance, we're the 9th largest economy in the entire world, ranking above most countries, but yet we rank 39th in states for unemployment. So there's obviously a misalignment there that we need to fix. So we've also been doing deep dives in data to identify opportunities to expand healthcare coverage. There's 5 million Texans without insurance or health. We developed a tool, Health Coverage Policy Explorer, that's specifically focused in on that. We also have accessibility issues lack of healthcare providers. We have issues with affordability. You know, we're trying to fix price transparency at the state level as well, to give consumers a better knowledge about what they're getting into with their healthcare costs prior to incurring those costs. And then broadband expansion, as I mentioned earlier, kind of affects both of those, right? It's affected education, it's affected workforce, it's affected healthcare, and certainly was the key, I believe, in the survival of many small businesses that were able to adapt, as you mentioned earlier, and continue the services online for their customers. So those are just some of the issues that we've been working on. Those top three have been critical for us.
You know, AJ, when you talk about Texas 2036, that number sounds like it's so far away, but it's only 15 years, right? So and look at all these issues that you brought up. Is there a way that you or us can have benchmarks for these, you know, in terms of progress made and impact? If this is a situation now, how are we measuring that we're getting better so that we can celebrate 15 years from now?
Yeah, 15 years, as I always say, goes by really quickly. I look at my youngest daughter, Isabella, who's 15 this year. I'm like, where did the time go? But, you know, as I mentioned earlier, we're a data-driven public policy shop. You know, our data drives our policy. It's a differentiator, in my opinion, for our organization, that we match those two together. We want to be equally welcomed in the House Democratic and House Republican caucus chair offices. You know, our founder often says that without data, you're just another guy with an opinion, right?
Right.
So our strategic framework looks at, and you can get that on our website. I know you listed that earlier. Takes more than 160 of these indicators. So it's everything, like I mentioned before, from fourth grade reading level. So right now, 70% of our students at that grade don't read at reading level. That's an issue. To the uninsured rate. So 18% of our population doesn't have health insurance. And if you take those two indicators, we've compared those with 11 other states on our website, peer states across the country. And so although we're doing very well and okay with some, and we've got the Texas Miracle going for us, and our economies continuing to grow, the ones I just mentioned to you, those two out of 160, we come in dead last in all of the 11 states. And so in the next 15 years, we want to change that. It does go by fast. So very, very much looking forward to working with organizations like yours in making that happen. We've got to look in the mirror and be honest about ourselves and improve.
Absolutely true. You're right. All right. So let's bring you both on now for some joint questions. So from your perspectives, what structural changes are needed in order to support the growth of small business and therefore the economy? Let's go with you, Blake, first. Sure.
So I think we've touched on a lot of them today in this conversation, but just to echo a couple, you know, in the short run, obviously I mentioned, you know, childcare, things like that, we're going to have to do to make sure that we get those aspects of our economy back up and running, access to capital. As new businesses form, we need to make sure we're doing even more than normal to support new business formations because we've lost so many small businesses. The more quickly we can get new businesses up and running, whether that's financial support or the technical training, Janie, that you and your team do, that's going to be important. Structurally speaking, though, AJ's touched on the two topics that we beat on a regular basis at the Dallas Fed. Prior to COVID, there were two things that we were working pretty heavily on from a research perspective. One was technology-enabled disruption and what that was doing to the labor force. So we all know that technology is, and the disruption created by technology is increasing exponentially. And that's displacing workers, right? There's a kind of a creative destruction aspect going on there. What does that mean? It means we need to reskill and retrain workers ever more agilely than we've ever done before. Well, guess what? COVID-19 came and took probably about 4 or 5 years worth of that technology-enabled disruption and compressed it into 1 year. And we saw lots of jobs get sort of taken out and small businesses pivoted to survive to the online environment and all that, creating new skills with new jobs. a massive sort of disruption, if you will, in the skill sets piece. So we have got to do better from a workforce training and development perspective. And we have got to create systems at a local level that allow us to be lifelong learners. This idea that your formal education is done by the age of 24 or 22 or whatever is really gone. We're all having to constantly learn new skills, and we need to have apparatuses that do that, particularly for workers whose jobs go away, get sort of disrupted, and need to learn new skills in the sectors that are growing and are increasing employment. So workforce development and skills training is paramount, and that has to be done at the state and local level. That can't be solved at a federal level. For the reasons AJ mentioned, it's got to be partnerships with the private sector that supply and demand are feeding one another, right? And it's got to be perpetual. And I think community colleges are going to be the point of the spear for this. We've got to really help community colleges not just become 2 years and you're done, kind of business model, but a constant sort of, repeat customer, if you will, mentality that you're going to have people come back and need retraining 5 or 10 years from now. And I think the other big issue structurally that AJ and Tom Luce and them are working on, I know our president, Rob Kaplan, talks to Tom Luce on a regular basis about these issues, early childhood education and education more generally. We, as AJ pointed out quite well, we're falling behind as a country, and as a state within our country, we're falling even, further behind our global competitors when it comes to math, reading, and science. We need to continue to do better in those, and it's got to start with early childhood education. We can't wait until, they hit the first grade and they're already, a year behind, because you'll never catch up. And then the third element is the other one that AJ talked about. We talk a lot about digital divide, digital access, all that creative destruction that's been created by technology and what happened with COVID has just put a magnifying glass on an issue we were already researching and talking about. And that is that digital access is going to be a game maker or a game breaker. It's going to affect your education experience if you do or you don't have it as a child growing up, and then ultimately what jobs as an adult you might be able to do because of the remote work environment and what have you. So digital access, the digital divide are just going to continue to be issues we have to do better at. And unfortunately, like many things in our society, that issue has a disproportionate effect on our minority groups. And that's another thing that we're turning our attention to at the Dallas Fed is we've got to do better at bringing people who have been marginally involved in the economy or not engaged at all in the economy into the economy. It's an untapped resource of workers that we've sidelined, and we've got to find ways to reach out and tap them and engage them and get them into the workforce for all the reasons we talked about earlier, Janie, which is we need the workers. Yeah. But giving them digital access and all that so they can get educated and learn about opportunities and all that is going to be a vital ingredient to that. So, job training and retraining, skills training, early childhood education, and digital divide, if I had to say, are the three things we've got to address at a structural level going forward. Those would be the three we would pick.
Yeah, I would just
go ahead, Jane.
I would just add, Janie, it's so intriguing to me that it seems like we coordinated all of our comments beforehand and we haven't spoken before today. And we're all on the same page, right, in terms of what the things that we've got to achieve together. And so I appreciated Blake's response. And it comes down to what we've been working on since I was at the Hispanic Chamber, right? For small businesses, especially, it's access to capital, access to people. We got 10 million more Texans that are projected to be in our state in the next 15 years by our bicentennial. We have to ensure that, as Blake said, education, workforce, housing, transportation, all those support mechanisms that are there to continue that healthy, attractive environment for small businesses and all businesses, so that SAEDF under Jenna's great leadership can continue to recruit and retain businesses as well and see those businesses flourish. And we got to make sure, as Blake said, we got that not just incoming Texans, but native Texans also receive that quality education that can compete, that have those skills. But one of the things that comes to mind is former Speaker Joe Strauss, who said, we have 1,000 people coming into our state every single day, and none of them are bringing roads or electricity or water or any of those things with them. So we've got to have those structures in place to support. So couldn't agree more with my friend Blake.
I'm smiling and I'm also reflecting, when Bill did my introduction that, we started LiftFund 27 years ago. The same issues we're talking about now, we were talking about then. That's why the creation of a not-for-profit that provides access to credit, because it was not available to what you all have been describing, right? And so it's sort of like COVID did put a magnifying glass on what are the things that we need in our economies. And so CDFIs have actually been elevated now, so much so that across the country, where people are saying, wow, where have you been all our lives? We didn't know that there were organizations that are dealing with these issues, and we want to help. And so I'm just so grateful to COVID, really, because if it had not been for something like this, it would not have opened these conversations. If an employee had told me February of 2020, can I work from home? I would have said, absolutely not. Right now, 90% of our employees are working from home. So I too, we've all had to pivot and look at what do we need to do to better our world and our economy. And I know we have some questions we want to get to, but I want to ask both of you one last question. From all these things that we've been talking about, is there a thread that you can see or a trend that is the most hopeful for small businesses? If you had some advice to give small businesses right now, what would that be? And I'll start with you, AJ.
No, sure. And I like what you said about, we have to make a conscious effort here to understand that although COVID has had an incredibly tragic impact on many of our lives, et cetera, we just as humans, we have to look at the bright side of things. And one of those things that I can point to is another small business and friend of mine, Johnny Hernandez, and his creation of margarita trucks, right? That's one great thing that came out of COVID. So, but to your point, I think that, it's about, we made a conscious decision in terms of very personal choice. We wanted to make sure our families survived all this, but also we wanted those small businesses around us to survive. And so supporting that network around small businesses, not just the community, but small businesses, working with other small businesses to ensure that happens. So we wanted to make sure that in our very limited power to help them survive. It was a good excuse to also buy a little bit more, put on a few pounds, a couple of pounds during COVID. I'll have one more taquito just to help your business, right? So that's anyway. We just wanted to make sure that those businesses add to our quality of life, and we wanted to ensure that they stuck around with us for the long term too. So that's how we try to do our best to contribute. And I think small businesses can do that with each other as well.
Thanks, AJ. Blake?
Yeah, so if I had one word of advice to offer a small business, it would be agility. The one thing that COVID has taught us is the ability to be agile and to pivot your business model was the difference between survival or not for most small businesses. And so, and as we continue to see things like technology-enabled disruption, rule our lives, because technology is just going to continue to increase exponentially, it is going to be imperative for small businesses to continue to be agile in their business models and how they do business. The good news is they can be. Being small has its advantages. You can be more agile and nimble when you're small. And I think we'll see that. So I would say that would be my one piece of advice. As far as the outlook for small businesses and kind of where we are today going forward, I actually think this is probably going to be as good a time as any the next few years for a small business, either to start a new small business or to build your small business, because number one, the economy is going to be doing pretty well. We've got a lot of pent up demand that we're starting to see come loose. And at the Dallas Fed, we've been tracking this. We're expecting the GDP of the U.S. economy to grow by 6+% this year. That's a ginormous number. Historically, or over the last decade since the Great Recession, we've been growing less than 3%, closer to 2.5%. So we're going to be, seeing a really robust year this year. And we think that'll continue next year, maybe not quite at 6%, but strong. So the climate will be great. And there's never been more attention on small business. There's never been more resources deployed to help small businesses. So that's one as bad as COVID has been, for all the reasons AJ mentioned, the human toll that we all are aware of, the psychological toll that it's taken on a lot of people. One of the benefits is that it has put a spotlight on the importance of small business to the U.S. economy, and our policymakers have responded and put programs in place, and organizations like yours, Janie, have now gotten a whole another level of notoriety and visibility that wasn't there before, and that will endure. That won't go away. And so I think the climate's getting pretty good for small business, but again, that agility is going to be I think key for anybody to keep in mind.
Yeah, it reminds me of AJ. You made the comment that your founder used that term, never let a crisis go to waste, right?
That's right. Winston Churchill's comment. That's right.
Winston Churchill's comment. So with that, I understand that Dan Yoxel is going to be sharing some questions that we have received in the chat box. Is that correct?
That is correct, Janie.
Thanks.
So, Blake, we're going to start with you. From the Fed's perspective, after the initial round of PPP loans, anything, again, from the Fed's perspective that we've learned or trends subsequent rounds have brought to the Fed's understanding? So
one of the things we learned, and I think we've always known this a little bit, because back during the financial crisis, the Fed responded with a whole bunch of emergency lending facilities. Janie will remember because she was on our board back during those times. This time around, not only did we do that at the Fed, but we of course had things like PPP that Congress was doing. The first thing that we learned in the second and sort of third round of PPP was that the demand for PPP loans dropped significantly from round one to round two. So not only the number of loans, but the size of the loans went down pretty dramatically in talking to just about every bank that we talked to. There's a few exceptions to that, but by and large, we saw that. That's good news. And we saw this in our other lending facilities at the Fed that were designed for larger businesses, medium-sized businesses, and even municipal and state governments. We never saw any of our programs get fully subscribed in terms of the loan, in terms of the borrowing demand for these special programs we put out there. So think of it as a credit card. Our credit card for these programs never got fully maxed out, never even close to fully maxed out. And now we could argue that there might have been some issues with the way we administered some of those, but by and large, what that said was just the announcement of these programs brought a lot of fear and consternation sort of under control. Just the idea that the Congress and the administration and organizations like the Fed were coming in with all guns. We were coming in with every tool we had. Brought a lot of the fear and uncertainty in the financial and credit markets under control. And so small businesses and medium and large businesses were able to actually get credit and funding through normal channels. They didn't have to depend on the PPP loans programs, for example. And so the first lesson we learned was, we overkilled it, and that's a good thing. And in doing so, we actually created confidence in the credit markets that allowed business to occur normally, which is what you want. You don't want people dependent on artificial, life support from the government or from the Fed. You want them to be able to go through the normal private sector financial channels. And those things began to restore rather quickly to the point where, we stopped doing a lot of our programs on December 31st because it just weren't needed anymore. And that's a good feeling, right? When you can discontinue doing some things that were emergency because you've pretty much seen the credit markets return to normal. So that was the biggest takeaway, Dan, was just that we never saw the uptake go as high as we were prepared for or that we were braced for. And particularly the second round showed us, demand for PPP loans dropped pretty considerably, which is good. There was still demand out there. Some businesses still needed it, but not nearly as many as we saw back in March and April of last year.
Thank you.
Yeah,
AJ. Oh, sorry, Janie, go ahead.
I was just going to add there on the PPP, it was at the smaller level in terms of the small businesses that did not think that they qualified for the first round came in to the second round, just FYI.
Yeah, we did hear there were some businesses that didn't do the first round that did the second round. There was some of that.
Sole proprietors, right? And they thought, oh, I don't have any employees. Oh, you are, you're the employee, right? So I just wanted to add that. So go ahead, Dan.
Sure. AJ, the points you made about your legislative agenda for education, healthcare, broadband as 3 areas of emphasis, are legislators connecting the dots and how those support our small business ecosystem in Texas?
I think so. Absolutely, Dan. I think, what we're witnessing with this legislature is absolutely a response to what's happened with the pandemic, and all that reverberates throughout the entire economy and supports those small businesses. So we're the items that we mentioned in terms of education and workforce and healthcare and broadband connectivity. Those all have an impact on those small businesses. We like to say healthier people tend to be educated people, and educated people tend to be healthier people. And people that are healthy are living longer, more vibrant lives, quality of lives, right, that they have, and they're innovative, they're productive. Small businesses rely on healthy and educated workers and healthy and educated customers. And so I think, again, the legislature is working through the lens of how the pandemic has really kind of impacted our overall economy. One of the things I also just wanted to comment on, I know we're running out of time, Janie, but in regard to data, right? Numbers are one thing, and we deal with numbers all the time. Blake, in the constituencies that he's supporting, you and those 4,400 businesses that are out there that you supported in 2020, my hat's off to you. That's just extraordinary, the ramping up of scaling to be able to support that level of business is just extraordinary, Janie. But you think about data is one thing, but stories are another, right? And every single one of those individual customers that you helped, we talk about 18%, 5 million people without insurance, 3 million people in rural communities that don't have access to broadband, 1 million people that don't have access in urban centers to broadband, to connectivity. And we tend to forget about the stories behind those, right? The one person out of that 1 million, the one person out of the one small business owner out of the 4,400. So I just appreciated the way in which you highlighted those in the very beginning of the presentation, Janie. I think that's really important that we talk about stories and what we're doing and contributing to the empowerment of these people's lives. Every single one of those, it's an echo effect, and it really does support the rest of our economy. So again, hats off to you, Janie, and your entire team.
Thank you, AJ. And thank you, Blake, for participating in this panel discussion. And I wish we had more time, but we're getting very close to noon. And I want to thank the guests that are participating in this webinar as well. And we hope that we can go to our website. If you have any questions, please email us. And I will pass it on to my board member, Bill Mull. Bill.
Thanks, Janie. I want to express gratitude. Gratitude to Blake and AJ, and especially to Janie too, for such an intelligent job of moderating, and to you, our viewers, for joining the webinar this morning. We're also grateful for an organization like LiftFund. LiftFund supports small businesses effectively, and they support those businesses which don't necessarily qualify from traditional sources of investment. Well, there is the reality that LiftFund is all about optimism, and we heard a lot of optimism today. There's plenty of work to do in support of small businesses, and I loved AJ's comment about the stories. LiftFund has many, 23,000 stories to tell of the success of small business. So we invite you to join our movement at LiftFund. There are abundant opportunities for donors, investors, and volunteers to assist LiftFund as we seek to level the financial playing field for all small business. Stay safe. Have a great weekend. Thank you. We'll see you at another of these great LiftFund seminars in the future. Thank you and good day.
Thank you to our guests. Thank you to our viewers. Thank you, Wells Fargo, for generously underwriting this series this year. We look forward to you joining us on May the 14th when we have Janie hosting entrepreneur and New York Times bestseller, Craig Hall. Have a wonderful weekend. Thank you, and support small business.